Today, it's Edwin's Monday evening Property Rant. Hello again, it's Martin North from Digital Finance Analytics, one that is post covering finance and property news. It's Monday evening again, and of course, Edwin is back for another rant, and this is going to be a doozy. Hi, Edwin, how are you doing?
I'm doing well, Martin. I'm doing well, but there's a lot of vendors out there that are, that have crying poor, or let's say, they're being shortchanged. But look, that's it, right? We're just going to start the segment with tonight's rant with the you can't make this shit up.
Yeah, it's become a very important part of the show, and well, you can't make this up, can you?
So last week we spoke about the politicians making all sorts of fees and all sorts of getting all sorts of payments. But now today's we're going to look at how the real estate industry gets its bonuses, and it's all there in black and white on the Sydney Morning Herald. But if you recall, Martin, we spoke about this almost 3 years ago when we raised this point. I mean, it's nothing new. There's nothing new under the sun. It just comes out in a different format and in a different suit. So you and I spoke about this 3 years ago. I alerted certain agents in the eastern suburbs that were to certain agents in the eastern suburbs that were playing these same games at that time. And I tried to talk to Fair Trade in New South Wales, and here we are. As they say in the article, and let's be clear, and even Tim McGibbon from the CEO of the New South Wales, New South Wales, the state body for the Real Estate Institute of New South Wales, even he says that there's nothing unlawful about what this fellow has done, but it's more to the point that it's unethical. I say that there's a case to be heard here, and if all the parties that feel that they're being undone by could perhaps not necessarily follow suit through the Property and Agents Act, but they could follow suit through the consumer law.
Yeah, so let's be clear that the whole concept of the way that the commission system works and who gets paid for what and how much people get paid for what is, well, it's broken, isn't it? It's completely broken. And we've said several times the problem is that people are after their own interests rather than the interests of their clients. Vendors are being misled, prospective purchasers are being misled, but, the light on the hill is the commission.
That's right, Martin, and this is it. This is why the commission structure does not work for the vendors, and the commission structure does not work, for even for buyers when you look at it. So when you look at the way that the commission is structured, the incentive isn't there for the agent to get the most for the vendor, because if they really tried to get the most, they would push the marketing campaigns even a lot further than what they used to. 2-3 weeks into it, and the properties are sold. But if the market is so hot, if the market if there's a lot more demand than there is supply, why not stretch the marketing campaign that further out and get a better price? But they won't get a better price, because if you look at it, even for the average commission in New South Wales, or the average commission in Sydney, is 1.5 plus GST. Let's round it off to 1.7%. From $1 million, that's what's that, $17,000 from $100,000. That's really only 1.7% of that. That's what, 1,700. So where is your incentive? But where's the incentive to get an extra $20,000-$30,000 for the vendor by stretching the campaign and working the buyers a little bit harder? There is no incentive, because they want to get on to the next job. They want to get on to the next commission. From a buyer's point of view, if you're a smart buyer, obviously you take advantage of these situations, and as we've shared on the show, and as I've talked, given out many tips as to what motivates the sale of property. In most cases, it's not the vendor's motivation, it's the agent's motivation, because if you can educate the agent to talk and persuade the vendor on your behalf, well, you're on a winner. I mean, there's certain ways that we do that and certain ways to move through that. So that is where the commission structure falls apart. And with these schemes now, with the underquoting schemes, and first of all, that's really persuading the vendors to accept also to accept a lower price. And what do they say about the underquoting? When you ask an agent, when you go in there, obviously knowing what the real prices are going to be at the end of the day. But look, I still ask the question, what's your guide? And they'll tell you, and it's generally 10, 15% below what you know is fair value for the property on any given day, because obviously we're in the game and we've been in the game for a very long time. You know that the representation of the property value is misleading, and it's somewhat bait advertising. But they'll tell you, and then if they've convinced the vendors that, or the way they convince the vendors to even accept a lower price is generally by saying to them, look, the buyers feedback, and this is the new term, Martin. This is a new term, buyers feedback. And it's bullshit, because they're more or less coaching the buyers to give a lower feedback value, so that they can go back to the vendor and say, see, look, this is the buyer's feedback, this is the buyer's feedback, and that is how they get these incentives above the reserve. They get the extra 10 cents in the dollar, 20 cents in the dollar above their reserves. They're achievable, but all along, as I say in my posts, the the vendors that want to play the shenanigans and these type of shenanigans, they're not innocent. At the end of the day, they're not innocent, because they fall themselves. They themselves don't know that they're the ones that are getting fleeced, apart from the potential buyers.
Yeah, and as you say in your post here, responding to Frothy Fiat, who said it's amazing how long they've held onto their commissions in today's information age, and that's partly true, but it is also the other people in the chain, so the vendors and how they're being played, the prospective purchasers and how they're being played. But everybody needs to know what the real agenda is, right? The agenda is maximizing the income of the agents, which means doing as short a campaign as possible. It means setting a very high expectation with the vendor initially and then ratcheting them down. And then it means, from the prospective purchaser's point of view, twisting their arm and trying to get them to come up, and using that ratchet mechanism, vendor on one side, purchaser on the other side, turning the screws and effectively trying to find a meeting point. But the point is that this is a process where that meeting point does not necessarily represent fair value. It does not
No.
mean that that is what the market price is. And that is the real shocking revelation.
Yeah. And the thing is, like, a lot of people that I've been speaking to over the weekend, in the industry, and what we've been discussing, and at the end of the day, we come back to one simple fact, or well, two. One is, when we alluded to a number of agencies that were playing this type of shenanigans, and they were starting to make headlines in mainstream news headlines, and across social media platforms. Many were asking the question: will they get the franchise licenses pulled? And this is the response from my insider, Matt, and one of the response from one of my managers in Ray White, the insiders in Ray White office, and he said, "Yes, I read the article. He will be okay. HQ will protect him. He wrote $9 million in commission." So there's your answer to it all, Martin. From the fish rots from the head down. So if head office don't care, what goes on, and they fall back to the CEO of the REI New South Wales. They fall back to his position. Oh well, you know what? He didn't do anything wrong. He didn't break the law. He just is just being a little bit unethical. Again, that's bullshit. And this is why you will never rid the industry you will never rid the industry, and I'll say it again, you will never rid the industry of the shenanigans and underquoting unless you start chopping the heads of of those in charge, stemming from the REI New South Wales to those those in head offices of the franchises that actually condone or turn a blind eye or turn away from what is in front of them. As I said to the REI New South Wales before I cancelled my membership with them years ago, and that was we need to name and shame and actually kick out those persistent underquoters or those that are bringing the industry into disrepute. They won't do it. They won't do it, and this is why I left, because they won't do it. Because you know why? Because it means that they will lose membership dollars, and it will upset those in the board, and the board is made up of the owners of the franchise owners of the major real estate offices, and there you have it. So they're not going to do anything. So if they condone it, if they turn a blind eye to it, do you think the industry is going to go from being number 47 out of 50? Sitting at 47 out of 50 professionals. When we used, years back, we used to be at least we were counted, in the 30s, but now we're up to 47, and we're sitting below politicians and bloody lawyers, for crying out loud.
Well, exactly. But I think there's another element in all of this, and that is that there's meant to be a supervisory process, right? And that, of course, is the Fair Trading Authority in New South Wales. Other states have similar agencies. But I question whether they're actually up for it. Question, do they actually have the knowledge of the industry to be able to actually understand how things work? And also, do they have the capacity, numbers of people on the ground, all of those things? And the answer is no and no.
No, look, 100%. This is where I reached out to George from industry training, and he's come onto the show a number of times. And I said to him, mate, what do you think about this? And he said, it so happened that I attended the New South Wales Fair Trading Property Agents Business Leaders Forum. And this is what he sent me from there, and this is as clear can be, Martin. This is the thing, and nothing is going to change until the legislative bodies and the groups have got to play or in place to look after the industry or different industries until they understand the industry that they are meant to be, or they've worked. None of these people have even worked in the industry outside of being in the focus groups and then being in these committees, right? And I mean, it's clear as clear. New South Wales Fair Trade and business leaders involved do not appear to have first-hand experience in the property services industry. This is from a report that was written after he attended the New South Wales training forum there, and this is it. How can the industry change? It's like having police officers without understanding the law, right? Issuing tickets. I mean, some would dispute that anyway, that most don't. But outside of that, it's really having pen pushers trying to go out. And as I say in my posts, you can see it a mile away. If you're involved in the industry, you can it's the old saying, if it looks like a duck, so if he walks like a duck, quacks like a duck, looks like a duck, it's got to be a duck, right? In this case, it's got to be an underquoter. You can see it a mile away. But if you're not in the industry, you're going to scratch your head. You're going to try and figure out, what does the law say? What does this say? What does that say? And they misconstrued everything. But again, we've been saying it for a long time. You bring out a policy, you bring out a legislative change, you bring out a regulation, and the industry will find it. Will find six ways to Sunday to circumvent that and to find the loopholes. And there are loopholes. I keep on calling out the bodies and the groups and the different mainstream property commentators and say, hit me up. I'll tell you where the loopholes are. I'll tell you what the loopholes are. I'll tell you how it works. I'll tell you how they get away with it. But until you sort of bring these sort of stories to the forefront, yeah, nothing's going to happen. The question is, moving forward, is anything going to be done? Again, we go back to the law wasn't broken according to to New South Wales Fair Trading and according to the CEO of the REI New South Wales. So therefore, happy as she goes, and let's go and write up another 7 million to 9 million in commissions, and head office gets 1 to 2 million of that. So why would head office want to castigate the individual?
Well, that's exactly the point. And I guess it sets in context my show from the other day. I actually made a show called How Will the Current Property Mess Play Out? And you'll see there I've got some snakes and ladders sitting in the middle of Sydney Harbour, trying to highlight the fact that there are potential winners and potential losers. The losers are sometimes the vendors and sometimes the prospective purchasers. The winners are some of the hangers-on, and the most significant hangers-on, of course, are the agents, but there's a bunch of others. And it is worth just reflecting, Edwin, when you stand back and think about this, this is actually from the ABC, and they just highlighted the fact that the household disposable income per capita has drifted down consistently since 2021, while the calls to the National Debt Helpline have gone up substantially at the same time. So we know that there are significant pressures, and I see that in my surveys. And in fact, my next show, the live show tomorrow, I'm going to go through some of this household analysis in more detail. But it is quite interesting just looking at what's going on. And this article really just brings it out quite nicely, because this article makes the point that there are so many suburbs now where even if you're earning $300,000, you can't get a home. This is catality analysis from CanStar. And they highlight particular areas, including, wait for it, Waverley, Linfield, Killara, Strathfield, Coogee, Clovelly, Greenwich, Northbridge, Bronte and Bellevue Hugh, where in fact they now call these ultra prime suburbs. Since when has Strathfield been ultra prime? Well, we'll not debate that maybe. The argument, of course, then is, well, the government shared equity home scheme and interest rate cuts are going to actually make the difference. And of course, the market is saying, oh, we're going to see some rate cuts. Maybe we'll see a rate cut tomorrow. Probably we will. Interestingly, the banks said that a lot of people were still keeping their repayments steady even as rates were cut. But guess what? We're seeing all of the spruiking now from the articles. This is Nick's article saying the horse is about to bolt, auction boom as rates to fall again. The RBA is tipped to deliver more mortgage relief. Boy is poised to pounce on rate cuts. Go west, particularly for young purchasers, says Taylor Trouth here in this article, or Sydney buy in July suburbs, as Aidan Devine has written, it's highlighting all these wonderful suburbs, or wait for it, it's a pretty cool time to sell, says Nicholas Finch, or look for the winter hotspots for bargains. It is remarkable just how much spruiking there is at the moment. And then, of course, you have this. Sydney house prices 41% above fair value. This is according to AMP research. The only markets in Australia deemed undervalued are Melbourne and Perth units by 11 and 10% respectively. All capitals are overvalued, but the degree has lessened over the last 6 months. But this is incredible. So there's a whole lot of stuff going on here, Edwin. And what I'm trying to highlight here is the fake news that we're seeing in all of these media coverage points. We've highlighted the agents and their motivation. So it's no surprise then that some people are finding it really, really difficult to decode what is really going on. Because if you read this stuff in these articles, you're going to get caught up in the so-called boom, despite the fact that actually the auction clearance rates, as we'll see shortly, were nowhere near as strong as featured in the articles over the weekend.
Yeah, but look, two things. The first thing is, the auction clearance rates really mean jack from our point of view, and it's really not so much a false, but it's not a true indication of what's happening in the market that you want to buy in. And this is where people have got to be very careful. And all these other articles from the left to the right, they paint all sorts of different narratives. You take a point, you take a sale, you take a particular home, and you can make a story out of it. They're all. It's all about clicks. It's all about ticks. It's all about likes. It's all about reposting. That's what gives them the money. One of the things that you and I bring out in our shows is the fact that there's a lot of information out there. The unfortunate thing is that a lot of people don't have the capacity to get out of that emotional rut that they get themselves involved with because they're reading too much into a lot of the articles into what they're saying, and they've been pushed into making bad decisions, worse decisions after bad decisions, and especially if you get caught up in just buying willy-nilly. You spoke about one of the suburbs there. You spoke about Coogee being one of the suburbs that is now out of reach beyond the $300,000 per annum. Yeah, okay, you got Coogee. You got South Coogee. The entry-level point at South Coogee is around about $4 million. Why is it now $4 million for a block of land? Because a lot of the blocks of land here in South Coogee now, you can convert it into a duplex site. So there's an upside. Now, if you move a little bit, if you look a little bit beyond even South Coogee and you go to Maroubra, and it's and the price points are you could get something in Maroubra for $700,000, $800,000 less than what you would buy in South Coogee, and that's you're only just crossing one main road, and you find yourself in Maroubra. So these are the you've got again. You also mentioned the suburb Strathfield. Yes, Strathfield. There are homes there in Strathfield that have gone for four, five, six, seven, $8 million. The Golden Triangle, because of the schools, they are bloody massive homes. By the way,
Mm.
absolutely monstrous homes, and it's who wants to live there. And why do they want to live there and park the money there, and the community and the culture around those properties and around those sites? And there are some monstrous homes there in Strathfield. But you go from Strathfield to South Strathfield, which is right next door. The secret's in the name. And you go from there to Croydon Park. Hey, and you go from 4 million, 5 million down to 2 million. So this is where people have got to be careful and really dissect and really you know read the headlines say a lot, but in sense of in pandering to emotion. But when you start looking at the fine print, you start looking at what they're really saying. For me, from all these posts and all these articles, one thing that stands out is that there's a lot of confusion out there, and people definitely got to be careful. And it is, and with the advent of the industry making it harder and harder to get relevant information. And as I've also been facing, with our clients, how and explaining to our clients how hard it is to do, proper due diligence. Short of look, in order to get information from councils, apart from talking to the town planner on duty, and what they can give you, not in written form, but just verbally, and what you can extract from them because you get to know them over the years. Outside of that, if you want more information that's archived, you got to file a freedom of information document, which can take up to 21 days to get a response. You don't have 21 days, Martin, and that's at best. We don't have 21 days in these marketing campaigns in order to get to find out if certain structures of the property would pass on as as approved or not approved. And the only other option is to spend more money, unless you've got, I must say, unless you've got people like myself or people that in my team that we can pretty much figure out whether things may have been approved or not, or then you go back to really looking at the current local instruments, planning instruments, and determine if there was an issue, whether or not that structure that's being added onto the property would pass the council's test, and you would be able to get a building information certificate, which is a reverse DA. If the council allows it, we know the Blacktown Council doesn't allow it. If it's not a structure that's been stamped by or approved by the council itself, you'll get a demolition order, similar to over Fairfield Council. So these are the dilemmas that people face. So if you don't know these things and you get caught up in the emotion, you're going to go out there and you're going to blow your money, and then you're going to find out that if the agents have this tendency to say, oh, look, the people have been here for the last 10 years, and the council hasn't said anything about the extension or the renovation or the this or the that or the conversion of the garage to a granny flat, blah, blah, blah. Yeah, they may have got along with the neighbours, and the neighbours didn't dob them in. But once you go, it doesn't mean that you're going to get along, and you buy it doesn't mean that you're going to get along with the neighbour, and the neighbour's going to be favourable to you. They'll dob you in, and they'll blob to the council, and then what are you going to do? Then you got to fork out an extra $200,000. You got to demolish the place, and then as I said, get a BIC, building information certificate, do a reverse DA, which is very, very costly, and then to see if he passes the current development instruments, and more than likely you won't. So they're the things, Martin, and this is why all those stories that broad brush stories, you just got to take it at that and scrutinize them. But we go back to many homes, many properties are sold because of emotion. Many are bought because of emotion. But you take that out and you start thinking a little bit more logically, and there's a lot of carnage on the other side.
Yeah, there's
A lot less carnage.
Yeah, absolutely. And I think sometimes, again, I've had my one-to-one conversations over the last couple of weeks with people who've been really swept up, and without wanting to pour a lot of cold water on their enthusiasm, you start asking some really critical questions. So things like, so what are the planning regulations in this area? What can and what can't you do? Things like, well, what is the zoning? What's going to happen down the road? You start looking at some of that. Well, they're actually going to, knock this down, and they're going to put up this. And I'll tell you, the zoning stuff is really interesting. I don't know whether you saw this, but there was this article talking about the rezoning deals that are going on all over the place at the moment. There was a $50 million Double Bay deal, and also one over in the Double Bay area where a couple of properties in Henrietta Street were sold to make $50 million, I think they were sold at, because of the fact that they could then throw up a whole load of apartments there. And even one of my old haunting grounds, Cremorne, where in fact the people there acquired a site with 118, 120, 122, 124 Benlong Road and 72 Gerrard Street in Cremorne. That's in the lower North Shore. The site near Cremorne's town centre is expected to support 45 to 50 luxury apartments. So you can see here that there are people looking for opportunities to knock down properties and build big things. And there's another article here showing the same sort of idea, this time with 12 Rose Bay homeowners looking to get out. So my point is, in the middle of all of this, when there are people trying to sort of make sensible purchase decisions as to buy or not buy, there are these big, massive transactions going on behind the scenes. So again, this is another example of developers looking to make significant money on the way through. And of course, some people will benefit from this. And so you're going to see the headlines about, ultra high prices again. Well, some of it's being driven by this stuff as well. So once again, you have to go, I'm sorry to say this, granular. You have to ask some really critical questions and don't get swept up.
No, you'd find that, look, these areas, those areas that you discussed, they were obviously the only areas that people are going to have the cojones to build. Outside of of these areas, you really got to have big balls as a developer, as a builder to build and not get not get taken over by the bank because you can't deliver the product and you basically do you you go under. Uh, and that's because of the cost of construction. So these are the only areas that make sense to build. Look, I'm not I'm not opposed to this type of developments in these high net worth areas. Uh, to an extent, especially when it's a low, when you're in the 40s or even 50s, because they are more geared and catered. They'll cater for the downsizers. So then you've got opportunities for younger families to move into the homes. But yeah, I do agree, strongly agree with your point, and that is what it does is it gives adjoining properties that aren't in the planning zone, aren't in the that don't fit the bill, and all of a sudden they have these grandiose expectations that hold on a minute, if my neighbour sold or across the road sold for 6 million and it's a and it you wouldn't put your mother-in-law in it, then well, my place is worth just as much, if not more. But your place doesn't fit the rezoning. You're
Mm.
outside the actual zone, and not only that, but as an individual home, you may not be able. You're not going to be able to do much apart from perhaps a dual occupancy, a duplex. You really need your neighbours and everybody else. But it comes to a point, Martin, where um, uh, in many areas now across Sydney, I can tell you that homes, regardless of the fact that they may sit on a land envelope that you could build a duplex, the actual house on the block of land that it's currently sitting on is worth more than it is as a development site. And yeah, we're in that we're in that quagmire. We're in that no man's land situation. So because when you start looking at your construction costs, when you start looking at your planning costs, and acquiring the block of land for starters, then you then got to sell at a very, very high price in order to get a good return. And if you're a newcomer to the industry, I mean, unless you're running under the one third, one third, one third rule, you're not gonna get out alive. You're not gonna get out. You potentially you're going to go under because there are so many regulations now, and that is what has stifled the the construction industry, which I've been calling this out for almost 2 decades, talking about this for 2 decades. So for me, it's nothing new of the reasons why we're at. It's actually perhaps a little bit longer than 2 decades that I've been saying, where when we when we started focusing on high-rise developments as opposed to small and medium density developments, that we lost the plot. Why? Because of the government's addiction to stamp duty. And this is where where now there's a story that got put out in the Sydney Morning Herald again, Martin, that if this is where the junkies are going to be supporting each other, or do we cut the juice? If we cut the juice, does that mean that that housing is going to fall, or will it continue to stand?
Well, absolutely. And there's a few things to unpack there. However you look at this, you've got to ask some hard questions. Now, this is your article when you were talking about once hooked on the Colombian gold, washing money through the sector. Others are hooked on stamp duty, other taxes. In other words, not happening whilst we have open border policy. And that part of this is the discussion about who's going to come in and who's going to buy. So that's part of it. The other part of it, though, I just want to wind back to what you said about the construction story, because I think this is something which people haven't actually really switched onto yet. There was an article here showing that the building blowout has meant that construction time is up by 50% from where it was previously. So it's taking a lot longer to build, as well as, of course, the cost. And it's interesting that Housing Minister Claire O'Neill said on Tuesday that Labor had been very frank that building homes both costs too much and takes too long. Well, that's very true. But the other side of the coin is this article. The financial year 25 shows that the insolvencies were the worst on record. And this is latest data figures here. ASIC data show that the construction sector was hit the worst, with 3,417 businesses becoming insolvent last financial year. And that's a 14.8% rise from the 2,977 builders that couldn't pay their bills in the 2024 financial year. So there is a really important message here for people to understand that whilst there's this aspiration to build more, the fact is that it's taking a lot longer, it's costing a lot more, and we've got more builders falling over on the way through. In fact, to the point where I was talking to somebody with a one-on-one conversation the other day who'd committed with a builder, and that builder basically was paid the first tranche of the construction costs and then collapsed. And so they're now in the situation where they're trying to find another builder to come in and pick up the job, having lost some of the money already. Now, there is an insurance scheme in the background that they may be able to claim on, but not in the short term. That's going to take months to work through. So they're sitting in this terrible state where they've sort of committed to something. They can't progress it. They can't pull out. And in the meantime, of course, they're living temporarily, which means it's costing more in terms of rent. And they've still got this first tranche that they paid that they're paying interest on. So it's a nutty situation. And again, I want to highlight that there are many people caught in the crossfire here.
Yeah, and what you're going to find, Martin, is with these situations are going to be widespread, and the problem there is that the builders will charge you more in order to take the liability of the first builder, because you're not going to really see if the footings have been poured. You're not really going to see. Yeah, you've got certifiers, yeah, you've got all this, yeah, blah blah blah. But at the end of the day, you're going to take a risk, and that is why it ends up costing more. Because that's but so and so they said it was going to be X, and now you're going to charge me X plus Y, and all this sort of stuff. So it's really the insurance that covering yourself from bad workmanship, because you don't know, you're buying literally, unless you start from scratch, you're not going to know, right? But there are obviously, you take certain precautions, and feel sorry for these people, but there's going to be a lot more moving forward. It's not an isolated event. We've seen many in some of the TV shows that highlight the news, the current affairs and that, and even we had one of the biggest residential builders in terms of freestanding homes. Can't remember the name off the top of my head. They cancelled their contracts because they couldn't meet them, and stupidly, people agreed to opt out of those contracts. I think they took a very low upside, because I would have kept them bound because they're still operating. Anyway, it's another story. But what this article is talking about in essence was talking about the corruption and the money laundering that Australia has been open for many decades with drug money. That's why I call it the Colombian gold. Being so prevalent in the industry. Listen, old Meadowbank got rebuilt on on Colombian gold. Those areas around there, roads, that's pretty much all being rebuilt on money that's been washed that was once Colombian gold. But is that going to stop? Is that going to create a fall? I don't believe so. And the other one, obviously, because I said the other junkies that they don't speak about are the government, state and federal governments, because of the taxes that they get with regards to property. So, one hand is washing the other to keep the fix going, to keep the supply going. Now, Don't Buy Now put out an interesting post. He said, I don't know whether it's a he or a she, he put out a post saying, "We don't have open borders." We don't have open borders. That was contradicting my post. They said, "Don't we have a two-year pause on international buyers?" And look, I knew for a fact that it's in a 2 year pause on existing dwellings, established dwellings, but just to make it clear with Don't Buy Now, there's your extract. Banning foreign purchases of established dwellings, but this is the pause for 2 years for established dwellings. You know, as you and I have questioned before, early last year, we said, why are foreigners allowed, not non-residents allowed to buy established dwellings in the first place? Since when did we allow foreigners to buy established dwellings outside of the vehicles that they've been using for decades to buy them, but individual purchases? And that in itself is bizarre. But here, as I point out, foreign buyers can still buy commercial property, whether it's established or new. They can still buy commercial property. They can buy new residential, obviously. They can buy the development sites. They can buy industrial sites, complexes, established or new. And they also get the family in order to avoid the Foreign Investment Review Board, they get to buy through trusts, as company syndicates, or under bare trust, which we've spoken about at length before in other podcasts. So there you go. So this is this is the thing, Martin. There are some people that hear things, but they don't really understand. And I'm sorry to say it, but Don't Buy Now is ignorant in their point. This is individuals that think they know about property. They think they know about what's really going on, but they don't really go deep, and they don't really have an understanding. And this is the misguided understanding that's out there. Unfortunately, I'm sure they're educated in a lot of other ways. And then Matt Barry also commented on here on the post and said, basically they can buy anything, just make not a knockdown by previous owner condition of the sale. So yeah, there's your development site or vacant block of land that they can buy, as long as they don't, they've got a certain period of time to build. So this is both if I can say, the ignorance and the across many that think they know about property, many that think they understand how the market's working, and in the most cases, many that just simply want a primary principal place of residence, and that's all they really want. But unfortunately, there's so much out there that they're misguided and they're forced into the corner and make the wrong decisions.
Absolutely. And just to build on that, there was this article which came from the International Education Association of Australia. No vested interest here, right? Fears migration clamp has gone too far as student numbers plunge. So there were 300,000 fewer overseas students in Australia in April than the end of 2024, as government policies aimed at limiting new enrolments take effect. Now, of course, we've highlighted the fact that there is a direct connection between students coming in and demand for property from overseas purchasers. It's not the only one, but I'm fascinated here that the education sector are grizzling and saying, which says this should be a wake-up call for both businesses and the wider community. Oh dear. we might find that some of those students are not going to be wanting to come and buy property in Australia. But we should also highlight the fact that there are very many other groups who are still knocking on the door and are still expecting to come in and buy property, and legitimately so. And so the migration story is rather different from the one that, of course, some people are claiming. And here's this one from the Tribune that highlighted the fact that 3,500 millionaires to leave India in 2025 with a wealth exodus of $26 billion. Well, some of those might knock on the door of Australia, Edwin.
Yeah, and this is what I said. It's a rise and rise of the silent tigers, and that was my prediction for 2025, and that was first cab off the rank. In the predictions that I put out there for 2025, because you and I, we not only look at what's in what the mainstream put out, but we're way ahead by following the trends and the trendsetters, which now become the WeChat chatterers, the silent tigers, new kids on the block, and other groups of people that make a huge impact. As we've been saying for over and over again, and that is it only takes 20, 30 people, 20, 30 buyers in one particular area to influence the markets, or it only takes 20, 30 new listings on market in certain parts of the Sydney region. So the markets across the Sydney region, and the property prices or expectations will go the other way as well. So, but it's interesting when you start looking at numbers. I like this from Parapower, because this article, because it's talking serious numbers. It doesn't talk percentages. Uh, you know, I mean, you start thinking 3,500 millionaires, which is really nothing. I mean, I'd like to know how many billionaires, because there's a lot more billionaires as well in India. Uh, that are willing to and are looking to leave and or park part of the wealth in safer havens. There's wealth exodus of $26 billion. We know that we are very favourable to this community. We've been talking about the silent tigers for over 18 months, and we've been on point. So again, we told you so. You never bet against the WeChat chatterers and the silent tigers. Look, you can bet against Trump, but never bet against the WeChat chatterers and the silent tigers, is my take.
Absolutely. And talking about the WeChat chatterers, this was also quite interesting, because it shows you that there's a really important point here about, well, who's coming and what skills do they bring?
Yeah, so the other side is the WeChat chatterers, right? So this is commentary amongst the WeChat chatter groups that Dusty and Evan follow, and they're talking about the fact, there's 200,000 skilled visa holders currently, and or plus, 200,000 plus, skilled visa holders, here in Australia, of which only 3% meet the shortage list for construction sector. So, I mean, that's what's that? That's 6,000. Now, most of them, Martin, and this is what the WeChat chatterers are talking, right? About, and they're saying that most of them are in that shortage list. Architects, engineers. How many bloody architects do you need to build a property? You need more laborers. You need more lower skilled tradespeople. But how many engineers do you need? You know to change a light bulb? How many engineers do you do you need to put down to put down skirting boards or floorboards? Uh, but they're also saying that if you look back historically, the skilled workforce, the visa holders that come under the skilled workforce, historically has only topped 3.4% anyway. When it comes to the construction industry, and you ask yourself the question, and look. we know part of the answer is the fact that the unions have got play a big role in this. And the unions control a lot of the bigger projects. So that's one thing. Does the government really want? Does the government really want to bring in uh, the labour force that are really required, or they think they're bringing in the labour force that are really required? But again, it's bureaucrats sitting in an office in the Eiffel Towers, sipping on their lattes and clocking $250,000 plus, and it's a committee of 10 making these decisions, and this is what you have. So what the WeChat Chatterers are saying moving forward is, listen, continue to buy the established, and obviously these are the local WeChat chatterers, because the new housing supply, as much as you can talk about it, as much as we can, the governments are doing a dance about it and doing this and doing that and beating the chest here and not beating the chest or this and that. At the end of the day, we're not bringing in the labour force that is required to build the properties. Like I said, how many engineers do you need to build a house? How many engineers do you need to build to change a light bulb, or how many architects do you need to put floorboards down, or to put in windows? This is what they're saying. So no matter which way you dissect it, um, and no matter how many articles are bought out, the simple fact is that not only are we bringing the wrong labor force to build, or we're just bringing in higher net worth individuals to buy, but not to build. And this is why it is, my opinion and the opinion of my team, that the majority of the Sydney property market will continue to rise and will continue to go high, and it's going to get more and more confusing. It's going to get more and more competitive to buy in the market, and people are just going to have to be very, very careful, because every lemon, as you say, I like that phrase here. Every lemon is going to be thrown at unbeknownst buyers, and sadly, they'll fall for it.
Absolutely. Well, I'm afraid I'm seeing it quite often in my conversations where people bought the wrong thing. And interestingly, talking about buying the wrong thing, very true with the high rise and the strata developments. I made a show yesterday called The Strata Nightmare Continues. And this is a bit of a series that I've been talking about, where people have been talking about the shift in planning. For example, the New South Wales apartment approvals boom as policies shift the dial. New South Wales posted the biggest increase in approvals. Another example here of another site where they're going to actually, this is Estonwick, always is going to put 11-story tower up after the state government fast-tracked the development for a former ABC complex. And the problem we've got is that the issue with regard to strata, and as you called it, the Pavlova Apartments, right? Parham High, and we know so much about what's going on here. Unfortunately, a lot of the prospective purchasers don't seem to be understanding the risks that they're walking towards. And yet we're seeing more and more in the way of incentives and encouragement for people to buy more of this stuff. And I find this really, well, honestly, I think it's disgraceful what's being proposed. You've highlighted this particular one where the investment company is now willing to upfront the thousands of dollars to help young buyers buy off the plan. There's a few questions, Edwin. A few questions.
Yeah, look, we got to clarify. This is our Pavlover Apartments segment. And just for the newcomers to the show, we refer to the developments, the high-rise developments across Sydney, mostly across the east coast. We call them Pavlover Apartments in comparison to the tofu apartments that they build over in China. So we've got our own. We've got the Pavlova Apartments, and this is part of that. Part of the show where we highlight things about the high rise development. So we've got people are faced or been pushed into buying the high-rise developments, and the state governments have publicly confessed to the fact that they're pushing also to have the regulatory bodies, basically more or less take a blind eye to or to dilute the the standards in order to build them faster and smaller to keep up with their political promises. So in this particular case, the gist is that you basically a homeowner can come up with $10,000. They will vet the property purchaser, and you'll be making up the balance of the deposit whilst the complex is under construction. And look, on face value, we're going to, a lot of home buyers are going to get thrown all sorts of incentives, both from the government and from the private sector as well, in order to buy. You got to, somebody's going to be paying the price, and unbeknownst to these potential buyers, they're the ones that are going to be paying the price at the end, a bigger price than what you would otherwise be able to buy something that's established. And albeit under the guise that they're trying to help people come into the market, get into the property market. The next incentive that and you heard it first, you heard it live on the Monday evening property rants with Martin. The next incentive is that they're going to offer with every two-bedroom apartment that is purchased, they will offer a BYD, parked at in the parking lot that's assigned to the unit. I'm just putting it out there, Martin. So, but what you've got to be, what you got to be careful. So, hey, burn your dreams. Burn your dreams when you put your deposit down or when you get your car. So, the thing is, people have got to be careful, because you got to have the understanding that the first mortgagee is going to be the bank. So, if the developer goes under, and we know that 57% of developers and builders are trading insolvent according to HIA. That's a first red flag as far as I'm concerned. So if you're in no deposit, no matter where it's held, no deposit is safe. Because at the end of the day, if somebody goes insolvent, guess what? You stand in line. The first and foremost is the bank. Outside of the receivers, they get paid first, then the banks, and then everybody else. So that's the first point that you've got to be cautious about. The second one is obviously that, as we've spoken about and we've shared many times, that 30% of new buildings have major defects, and it's new development. 37% or thereabouts are completed with major defects. So the question is yours going to have is yours going to fall into that 30% category? And thirdly, you've got what the property marketing companies tell you that the strata levies are going to be. You can multiply that number by 4, and you'll get the real value. Now, they may be that price in the first year, because the developer will still own, and until the majority of the complex is privately owned, it's no longer in the hands of the developer. Well, then, whilst the developer still owns a higher percentage, they control the strata. And typically in the first year, the strata levies are very low because the developer is still in there. But once the developer sells out, guess what? Miraculously, the strata levies go up by 3 times, if not 4 times as much as what you were paying. So if you're going to go in here, you got to go in here with eyes wide open. If you're going to be purchasing off the plan, let alone under these incentives.
Absolutely. And the show that I referred to was talking specifically about the rise in the strata fees, and the article that was in the on the ABC, where half of Canberra's bankruptcy filings last year were from strata managers. And that's pretty concerning, right? Chasing fees, that's basically given information on an inquiry. And check the earlier show. My concern here is I get this again and again that people were budgeting for a certain level of strata fees. And you say they might be low in the first year or two, but then suddenly they start accelerating. And that acceleration comes quick. And it's very hard to try and get a read on how much the strata fees are going to be in later years. And if you try and ask the strata company, they don't want to talk to you. And even if you look back at previous projects, and I think you should try and do that, it's quite hard to get data that's good data. So to my mind, a lot of people who are thinking about purchasing the high rise, they've got this blank in their cash flow called increasing strata fees. But I'm of the view that most likely we're going to see significant rises. And of course, in some cases, those rises come so quick that people can't accommodate. Now, people said to me in my response to my earlier show, well, if you were buying a property and you're owning a property, you still have maintenance. Yes, you do, but you have much more control of the maintenance of your property and when to and how to maintain it. Whereas if you're actually paying money to a strata committee, that committee can almost decide what they want to decide with regard to future rate rises in strata levies. And you've got very little recourse if everybody else says, yeah, we've got to pay it. And as this article also made the point, that because of very light legal protection, they can come after you in a month or two and then start charging you extra fees and charges to try and recover the fees that were outstanding, and you can get into a legal stoush very quickly. So there's a really big issue here. But my point is, and the issue about this article that I had was, they were talking about the legal issues around the strata fees, but there's a much bigger question here about surely more people are being steered now into high rise thanks to government policy, both federal and state level, which means that more people are going to get caught up in this problem. And we're laying a bigger and bigger problem for ourselves because, as we say, 37%, according to New South Wales Building Commission, 37% of strata properties have major structural defects, which translates into higher levels into the future. So you're basically saying, open your wallet, help yourself.
Yeah, exactly. Might as well give them the password to your bank account. And my password is not 12345.
Absolutely. Well, let's just close out with the numbers because, we should keep a track of where we are. And the Sydney numbers on the 30th of June, 19,793 properties listed for sale in the Sydney region. That's based on the domain definition of Sydney region. 19,511 the week later, so a slight fall on the 7th. And you can see here how the listings are tracking. Come down a little, but they're still tracking a little bit up from last year. But there were a lot of lemons in there. We should have a lemon indicator, I think, in this particular chart, Edwin. That would help quite considerably because there are lots of lemons on the market at the moment. In Melbourne, on the 30th, 25,015. A week later, 25,151. So, a little bit of a change of tack there. And in Brisbane, 3,461 on the 30th and 3,402 on the 7th. So slight move down, but nothing material. And looking at the auctions, well, this is quite interesting, right? So everybody is saying we're going to see a lot more auctions, but actually look at the auction stats. So last auction, the numbers were somewhat down. And there's something weird, Edwin, that's going on here that isn't being reported.
No, this is the numbers are way down when you compare it to 2024 numbers. That's what I'm saying. Well, and this shows two things. One is the confidence level from the vendors is low in order to put the property on the market for sale via auction, and there's less participation, and you hear more of that when you hear more of that across the board, as we say, across the traps when you're talking to the to agents in many markets of Sydney. The participation is very low, and people are taking the stance, which is not a bad thing, Mark. No, I think it's a good thing. It's really telling the industry, well, stuff you. If you're going to play silly games, we're not going to participate. And participation is one of the ways that you can make, or lack of participation is one of the ways that people are going to start thinking as to how they're going to present the properties. Obviously, moving forward, as we're getting closer to spring now, as we start heading towards spring, we're going to see what greater numbers on market are going to reflect in terms of, is the confidence levels, is that going to translate into the top end stories that are saying that auction clearance rates are breaking very high now. We're in the 70s, we're almost in the mid 70s once again. Is that going to give people the confidence to put the properties on the market? Have we reached the saturation point for properties on market? And do we need to bring more demand from overseas in order to buy? Particularly the high-end properties that seem to be waning a little bit under auction conditions. I mean, there's a whole change. There's a whole thing that needs to be unpacked with what is happening with auctions. I think, and I hope, look, I hope I'm right, but I think that, as I said, that flavor, of uh, that what do you call it? That need or desire to take your property to auction, and that um, preference to go to sell by auction is certainly taking a beating at the moment. And I think that it's because people are thinking twice and are being more educated.
Absolutely. And just on the trends, you can see here that the Sydney home median value is continuing to slide back. So it tells you something about the market mix. So the top end market is definitely slowing. That's true for apartments as well as homes. There's a bit more activity down lower. Melbourne's slightly different, and people are now claiming that Melbourne markets are recovering, although I'm a bit skeptical of that, looking at what's actually available. So it's not as clear a cut as perhaps some would say. And just finally, to close out the show here, we should look at the rentals. So in Sydney on the 30th, 12,035. On the 7th, 12,034. So not much change. In Melbourne, 12,072. Clearly, 12,000 is the number on the 23rd, and 12,032 on the 7th. So you can see here that the rental situation is pretty much static. Interestingly, the latest data showed that the advertised rents were continuing to grow, but grow more slowly. But I'm still seeing quite a few people in my one-on-ones who are being confronted with big increases from individual situations which are not represented in the advertised numbers. Well, as we come to the end of the show, Edwin, just time to talk about wolves in sheep's clothing.
Yeah, this is, I think, a good time to reflect, and the fact that there are going to be many offers and many. If you're looking at selling your home, obviously the offers are going to come by way of the selling agents. They're going to come to you, as lambs, but in reality, you gotta look beyond that facade, and take it for what they are. The wolves. They're not out to get I shouldn't say all, but the majority are not there to get to get you the best price, or not looking after your best interest. There, and when you understand this and understand very, very clearly, is their first and foremost loyalty is to their back pocket. Is to the boss, or head office, not you. You come second. And so be careful. This is why when we get called out to talk to prospective sellers, and to how to help them organize the marketing campaign, or the property for sale, and then as we interview the agents, the local agents, or even agents from outside of the area, to see who's going to look after them best, as we get, that's part of our job. We give the vendors a better understanding, and we can see who's going to take who's really going to take the bull by the horns, who's really going to put blood, sweat, and tears into the sale of the property to get the best results. And this is why I've put out that video, and we shared before as well, on unless selling agents have got skin in the game, they're not really they're not really after your best interest. So you got to have, they've got to have skin in the game. It also goes for buying property. There's going to be all sorts of offers, like we just saw from those private sellers or marketing companies that try to sell you and give you furniture and steak knives and as I said, a BYD in the car park. Well, whatever the incentive is, at the end of the day, you got to take a step back and say, well, who's really paying for this? You are. You're going to be paying for it. Um, and from a buying point of view, and if agents are giving you the before you buy, before you bid, uh, reports for free, albeit very cheap for $45 or $55, well, guess what? Who's going to be paying for the fact that it's a very lightweight report? You may think you paid very cheap and you got the property, but hey, there's no true disclosure because you didn't commission that report yourself. It was the agent, and the building inspectors aren't going to bite the hand that feeds them. And the same goes for rental properties. You can get offered all sorts of things in order to move into homes. There are some homes in some parts of Sydney, in Sydney markets, that have been lingering on for a long time. Like they've been wanting 1,200, 1,100, $900 respectfully in different areas and they can't get tenants in. Yeah, there are reasons why the rent's overpriced, but they're looking they'll offer you all sorts of incentives. You have 1 week's free rent or this or that. Yeah, be careful as well, and see what else is around that may not be as new and as fancy, but there's there's the industry. The industry is full of wolves in sheep's clothing. You just got to be careful.
Yes, and I always say that being careful is one thing, but you've also got to sort of take some of that accountability on yourself, and don't just take what other people say as being true. And that means that you've got perhaps to do a bit more work yourself. Do a little bit of double taking and just prod and poke the statistics that you're being quoted at. And I'd also make the point, Edwin, that it's getting harder and harder because of the way that the property portals are reporting the property situation. It's very hard now for individuals to get any good data at all on what prices are really doing in terms of trends. And that, I think, is another disgraceful issue. So as well as the sheep and wolves clothing, we've also got this haze being spread over the information that's available to ordinary people trying to make decisions. And it's forcing them back into a defensive situation where they don't have enough information to make good decisions, which is why I underscore again, it's really, really important to make sure that you do the deep digging on the way through. And what that means is it makes it harder, makes it more extended possibly, but only then will you make the best possible decision that you can. And I always remind people it's very easy to repent at your leisure when you make a bad property purchase decision because you've got to deal with it subsequent. So, Edwin, it's really important that people take their time to do the due diligence they need, because they will save thousands and thousands eventually down the road.
100%, Martin. And on that note, let's look forward for next week's rant. The days are going quick again, but I'm sure in that speed there will be a lot more to talk about next week, and there'll be a lot more shenanigans going on, and we can entertain our audience with the week to come.
Absolutely. Well, hopefully entertaining, but also informative. Thank you, Edwin. Take care. Have a good week. We'll see you next time.
Ciao.